Hello and welcome to Talking Success, the podcast series that focuses on everything FinTech. I'm your host, Darren Franks, and I'm thrilled to have you join us for another episode. This week we have a very special guest with us, no other than Ghita Erling, who's the CEO of the Payments Association of South Africa. Ghita is a seasoned professional with many years of experience in the payments industry, and we're super excited to have her here today. So sit back, grab a cappuccino, and let's start talking success. Hello, everybody, and welcome to the Talking Success podcast. We're here for a new series this year, and I'm delighted to welcome our first guest, which is Ghita Erling, who is the CEO of the Payments Association of South Africa. Ghita, good afternoon. It's lovely to see you. Really pleased you can make it with us today. We'll come on to sort of you and PASA and PIB, everything else, but I was thinking the other day, well, what should we talk about? What are some of the really topical things that are sort of happening in the industry? And after about 5 minutes of thinking this through, my head kind of exploded. So we've got M&Os moving into fintechs. We've got retailers getting banking licenses. We've got consumers being able to buy groceries in Bitcoin. We've got banks coming up with all sorts of different alternative payment methods. We've got RPP coming in a few weeks' time, or 6 weeks' time or so. We've got the payments companies consolidating and offering omni-channel services to merchants. We've got international fintechs coming into South Africa with all sorts of different innovations. And I think probably one of the most exciting things is we've still got funding. We've got big fundraising still happening here in South Africa. Just last week, Lulaland, raising $35 million on a Series B. I mean, it's fantastic, especially when you see what's going on in the rest of the economy. So I don't know where to start, quite honestly. I think we'll try and unpack as many of these as we possibly can. But before we get into all of that, Ghita, if you could just talk to us a little bit about you, we'd love to find out a bit more about you, and about the Payments Association of South Africa, and then perhaps what the Payments Association is going to look like in the not-so-distant future. So over to you.
Thank you. Yeah, and you describe an incredibly vibrant industry, which is one that's kept me very happy and entertained over a number of years. So I've been in financial services and largely the banking sector for, I'm almost embarrassed to say 20-something years. It is what it is, and a big chunk of it's been spent in payments or transactional services. I think because this is such an exciting space, and it is changing so quickly and in good ways for the economy. So that's what's kept me entertained and happy. The Payments Association of South Africa is, I'll give you the formal piece first, and then I'll give you a slightly informal view of what we're doing. We're a payment system management body in terms of the National Payment System Act, designated into that role by the Reserve Bank, which means our role is to manage the activities of our members in the national payment system, which is a big mouthful to say we ensure interoperability. So at the heart of what we do is making sure that money can be moved from one bank to another bank safely, securely, and if on the very off chance there's some unexpected thing happens, that it gets managed appropriately. And I say interoperability, but it's very easy to say that as well, because obviously anything that requires a change to systems that talk to each other require everybody to make the change at the same time. So we get involved in a whole bunch of other things like project management and coordinating activities in the system, looking towards the modernization of the system. So it's an exciting role in an exciting space.
Fantastic. And your stakeholders, the members of PASA, are predominantly banks, are they? You have some payments companies as well, or what does that look like?
So our stakeholder group is obviously much bigger than our member group. So let's start off with the members. Sure. They are mostly banks, but the Act allows for non-banks to be designated into the payment system. And there have been about 3 or 4 of those in the last 18 months. So we have a growing number of non-banks who are busy jumping through the hoops to be able to transact directly in the South African payment systems. Okay. And even before them, there were a couple of non-bank members, Postbank, Diners Club, for example.
Great. And then
stakeholders, though, are much broader.
So
So
that was
let's just touch on
that,
that one.
that
Because
was the
obviously,
formal
yeah,
introduction. Yeah, that was kind of the formal bit, and then
yeah.
the informal side, or how would you describe it?
Or the real world side. So what do you have to do
Yeah.
to make this work? And there, obviously, the regulators are a big element because we work quite closely with them, with our mandate being very much around what is good for the payment system. But the non-bank community and the user community. So there's a big payments community that you described in your introduction to some extent, who not necessarily banks, are very big stakeholders. And then the users of payment systems, whose businesses fundamentally depend on systems working efficiently for them, are also big stakeholders of ours. So we deal with a very large community of very diverse entities, all of whom have a big stake in the space.
Great. And then I was fortunate enough, and thank you very much to you and your team for inviting myself and a couple of colleagues to the PIB launch. For those of our audience who don't know what PIB is and what that's going to look like, perhaps you can give us a bit of an insight as to why that's come about and what that's going to look like, and maybe the process around, because I know it's not been let's just change the name. There's been a huge amount of work that's gone into this. I was blown away by the hours that I think one of your stakeholders at PwC said that they'd dedicated and that was just PwC. So I'd love to know a little bit more about that as well, please, Ghita.
So payments industry body, PIB, is a placeholder for an entity that's going to replace PASA. So PASA, for the last 26 years now, has played its role within the payments industry, but only for banks and designated payment system participants, which is a small group of parties. I think we're probably about 35 at the moment. But there are all these other parties who play a significant role within payments, connecting point-of-sale devices through to banks, acting as bureaus, dealing with debit orders, MNOs who are offering their own versions of payment solutions. So the list goes on and on and on. And in light of a stated directional move towards opening up the payment systems in this country, there's obviously a need for us to also become a more inclusive organization. And a very strategic decision was made to say, rather than just taking the current organization and throwing open the doors and new parties walk into 25 years, 26 years of legacy of how things were done, let's rather get the community together, get everybody who's potentially involved in future and licensed in future, which is a much bigger group, together to co-design what this new entity should look like. And that came off the back of probably about 5 years of deliberation. So since 2016, when the policy paper was released on the new National Payment System Act, it talked about opening up. It wasn't clear whether there was actually a need for an entity like a PASA or not in this new regulatory regime. And what's happened in the last few years is we've all sat down and we've said it's critical that the private sector is able to organize itself for the good of the country, to make sure that the middle mile holds, that the interoperability is there, and that you don't fragment the payment systems. Because in payments, the benefit is in the interoperability, it's the network economics. So to protect that asset for the country and to make sure that it continues to meet the needs of the country, the view and the agreement that's been received is there is a need for a body like a PASA, that with a different membership, we've chosen to redesign it.
And the design team, as you quite rightly said a moment ago, was kind of all-encompassing. So you had, my understanding, please correct me if I'm wrong, but you had SARB on one side, you had private sort of payments companies on the other, we had banks, you had consulting firms, you had law firms. This was very much a big program. It wasn't just, as I said, a rebrand. This was kind of a greenfield project, right?
Yeah, this I think was a very South African approach, which goes out there and says, who's interested, who feels they need to be party to this, will come in and be party to it. Because we've seen similar things done in similar organizations elsewhere in the world. And it's been done very incrementally, step by step. You know, we open up to another category of financial service companies, and then we open up to another category of payment service providers. I think that we've taken a very uniquely South African cultural approach to this in saying, we know certain parties are going to be in the net from a regulation point of view, invite all of them. And then we went out on social media and said, who else is interested? And to our surprise, there was a very broad range of people, from payment software providers, specialists in payment law, as you mentioned, consultants who feel they have an interest in this industry and how it plays out, and therefore chose to be involved. We even had a number of parties who specialize in physical cash notes, choosing to engage in the process and give us great feedback and great input as part of it. So that comes with its own complexities. In that you have to get all of these, well, you first have to talk the same language so that you can have the meaningful conversations, which took us a while. But it does mean that we've ended up with something that a very large group of people have committed to.
5 years in the making. When is the official launch of PIB? Where do you see that happening? The $1 million question, rand question, I should say. Sorry.
And let's be, so 4 years to get to the point where we agreed we needed one of these, a year to do the design roughly. The design now sits with the Reserve Bank, who need to say, does it meet their requirements? And they almost were the sponsor of the program in acknowledging that such a private sector entity is needed. So they're working through the design report and will hopefully come back to us with a no objection to say, yes, we think this can work and you can go ahead. Then we need to build. And if it was just as simple as simply new legal entity, new board, new MR, that would be easy. But the problem is there's a dependency on the change in the Act. And that is the probably the big unknown in this conversation, because a bill has to go through Parliament, an Act has to be promulgated. We're hoping it will take place during the course of this year, but we there's no guarantees around the timing because it's not a process that any of us can control or manage. So
I'd love to say I've read the whole report, but Ghita, I'd be lying to you. It's quite a conclusive report, right? I kind of downloaded it and it saved it to my desktop, and it was like, whoa, okay, this is quite comprehensive. So I think, but perhaps leave it to SARB to digest and see when they come back to you. But exciting things happening generally within the payments ecosystem. We'll come on to some of the sort of alternative methods and what have you shortly. But let's talk about RPP, because that's a big thing that's happening, I believe, around about the 20-something of March. I was speaking to BankServe the other day, and I think that they're all very excited to see, the launch of this. Bless you. For those of you, or for those of our sort of listeners who don't know what RPP is, perhaps you can just explain that in sort of relatively basic terms, what that means for South Africa, what that means for banks, and perhaps what that means for payments companies as well as consumers.
Yes, so this has been a tremendously exciting program, and one which I think really will change the country, and in ways that we can't always predict at this stage of the game. So the Rapid Payments Program was a different approach to developing a new payments platform. And developing payments platforms is complex because there's so many parties in an interoperable world who have to be part of the development. So RPP was the program that has delivered PaySharp, which is the first iteration of a new real-time payment system that allows you to pay to proxies. So you don't have to know the bank account details. You can pay to a cell phone number or a variant of a cell phone number, and will also come with functionality like a request to pay. So it's a low value, low cost to the consumer solution for account-to-account payments as we stand today. We've seen similar solutions in not terribly different countries from ours take off in a huge way. And our hope is that this will give elements of the market who haven't had the option access to a digital alternative. So both the ability to pay and an accept in an electronic format wherever you happen to be. As a country, we very proudly talk about 80% of the population have bank accounts, but big chunks of that population do 2 transactions on their bank accounts a month. They do a balance transfer and they do a single cash withdrawal. And that's completely rational. If you've got to pay a taxi fare to get to a point where you can draw your cash and you can't choose anything other than cash closer to home, that's what you're going to do. And what we're hoping to achieve out of the system is create entirely new alternatives for financial inclusion on a different level, which is more than just having the bank account, and also to give people alternatives to cash. We understand that cash is a financial inclusion imperative and always has to be there, but you at least want to have alternatives to having to pull out banknotes.
And Ghita, how does this differ from an instant EFT or the ability for me to open my FNB app and put in someone's cell phone number and send them, $50 or $100? How does RPP differ from that?
So a couple of quite key points. So the instant EFT we offer today in South Africa's market is actually one of the earliest instant payment systems globally. It dates back to 2006. And it was a very well-designed system for the time. It was built on a card standard, and it has some limitations. So part of this is modernizing the payment systems. And we talk about that very glibly, but I think as a country, we've really come to understand the hard way what it means if you don't maintain a modernized core infrastructure. And there's no question that functional payment systems are core infrastructure for everybody, no matter how you choose to look at it. So this had two focuses. The one is a modernized system, and the platform that it's built on will in fact be used to modernize other payment systems over time. So it's built on a far more, I keep using the word modern, but it's built on a far more modern architecture, API-based orchestration layers. So you can deploy new functionality relatively quickly, and it's seen as a first step towards ultimately retiring all of our legacy credit payment systems in favor of this new environment. So that's the one piece of it. The other piece has been in providing a more fit-for-purpose solution. So you at FNB might be able to do an instant payment to anybody else at FNB. So if it's, you can do it to most other banks, but if it's to a cell phone number, it's only a small subset of people whose cell phone numbers that could apply. Yeah, because the cell phone number solution is also cross-bank. The mobile number or the proxy would apply irrespective of which bank the party you're paying to sits at, which is back to our core purpose around interoperability at the heart of what we seek to do.
Okay, fantastic. And you mentioned this is API, kind of API built, or API first, or the architecture behind this. Does that mean that you're going to be allowing third parties to be able to plug into the RPP platform in order to use those? Am I allowed to call them rails? Is RPP a rail?
Yes. Yeah. Better than plumbing.
Plumbing, right. So are third parties, payments service providers and other sort of fintechs going to be able to plug directly into RPP at some point?
So there's two answers to that question. In our current regulatory environment, there's nothing that if your corporate bank has the risk appetite, you can, as their client, technically plug in directly, but they're responsible for everything that you do. In the changes to the regulation that we anticipate, other parties will be able to plug in directly without doing it under the name of their corporate bank. But when those changes come in and exactly what they look like, we don't know. So as it stands today, it's the existing model. You have to have a bank behind you. Doesn't stop you from technically connecting directly.
And the first iteration is very much peer-to-peer payments. When it comes to merchant or peer to merchant, is that later down the line, or is it quite a long way off, or is the architecture now in place where it's quite easy to then build that additional functionality and services on top?
Yeah, so the initial functionality that will go live is the instant payment. We already have a QR code standard in this country that can be used for card or for these transactions. So you could, in fact, kind of on day one initiate a merchant payment from a QR code if your bank has enabled that. Because, the person to merchant, and then the next piece, I guess, of the person to merchant is the request to pay. So where your merchant asks you to pay, that functionality is still going to be delivered. But in my view and my understanding, the core-based functionality that we deliver has many applications or many case applications, and it will depend on the individual banks who offer these services exactly how they choose to roll it out and which of their channels they do it on.
So there's positive sort of influence or disruption for financial inclusion, which is, fantastic. When we look at the potential disruption that could have to payments companies, especially those that offer the instant EFT and screen scraping and what have you, which I understand that the legislation is changing on sort of screen scraping as a form of gathering data. What sort of effect do you think that will have on the industry? Do you think the sort of instant EFT solutions that are out there may become something of a historic offering, and payments companies will need to evolve their offerings, become more omni-channel, go more online, more card not present? What's your view on that?
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
So the current instant EFT offerings typically have two elements. The one element, as you say, is the screen scraping to initiate the payment on the customer's bank account. And then the other piece is the physical movement of funds. RPP will enable the physical movement of funds. So in that way, it is probably going to be quite of benefit to the instant EFT solution providers. The piece about initiating a payment on a third-party account, which is what the screen scraping in effect is used to do, is something that will be covered in forthcoming open banking regulation. And that's obviously very much a risk, security, fraud discussion, because under what circumstances do you allow somebody to initiate a payment off your account? Debit orders in this country have already been something we've had to put a lot of focus on to ensure that there aren't rogue collections. And most people would have seen the 99 and 199 Rand collections having disappeared from their accounts in recent years. But with a debit order, you can still dispute it. With a payment, it's irrevocable once it's been pushed. So I think a lot of the regulatory and policy focus around the initiating a payment on somebody else's account is still the work that needs to be done. And that's where we expect the focus to be. So RPP will definitely enable these types of solutions. It's the open banking regulatory regime that I think potentially changes the shape of the game.
You mentioned the regulators. I know we had a brief discussion about this the other day, but I think you can see why. I think there is a bit of frustration in the market for fintechs saying, we're trying to get an answer or a query to a question we've got on some regulation, and we just don't get a response. And I think it's quite clear and evident that the amount of work SARB has at the moment and FSCA has at the moment landing on their desks. I mean, if you can just imagine, the whole crypto side is a whole different ballgame, let alone RPP coming into place, then obviously looking at the cyber risks, as well as obviously the physical risk of, ensuring infrastructure's in place. Then you've got, the different licensing that's being applied for. You've got, as we said a bit earlier, you've got, fintech banks becoming fintechs, and we've got MNOs becoming fintechs, and everyone's diving for sort of licensing in order to operate. And I think you probably understand why there's such a, I don't want to say backlog, but why it's very, very difficult for SARB to be able to respond to everyone. From a payments association, from a PASA perspective, obviously you've got your members and you've got your stakeholders. What sort of support do you give to either new fintechs or new payments companies that are coming into the market, whether that be domestic or whether that be international, as well as your existing members who have got, fully fledged businesses and licensing, but have queries or have things they need to discuss as well? Where does PASA sit within that?
So just by the nature of who we are, we get lots of queries, as you say, when somebody wants to enter the market from overseas, or if they're choosing to enter the payments environment. And there we can give very clear direction in terms of what it takes to what steps you need to go through, who to engage with, and even how to fill out the form sometimes, because we've seen these things a few times. Where we see genuinely new business models or genuinely new risks being raised, we will facilitate an introduction to the regulator or raise it ourselves, because we think those are important considerations to be taken into account as regulation is developed. And we obviously work very closely with the regulator in terms of our activities, to the extent that the SARB has a non-voting position on our board, on our council. So there's complete visibility around what we do in terms of our payment system management body designation. And I very much on a similar page with you. I think being a central banker today must be one of the toughest roles in the world, because from what is money, which has always been central bank domain, through to all these new technical and business model innovations. And I think the South African Reserve Bank have done very well in navigating this space compared to central banks elsewhere in the world. We might sometimes be a little bit slower to be right on the bleeding edge, but there's good reason for that.
No, absolutely. And whilst we're talking about that, I think it would be nascent of me not to ask you about CBDC.
Yes.
Do you have a view on that? Do you see that being something that South Africa will adopt, or the central banks will adopt in some point in the future, whether that be in 3, 5, whatever many years that may be? How do you see that affecting payments, the economy, and really the sector? I'd love to get your insights on this.
So and this is obviously my personal view, I'm at heart a pragmatist. So the first question I have to ask you is, what problem are we seeking to solve through CBDCs? So if the answer you give me is financial inclusion, then I don't buy it, because that last mile problem I described earlier about how does the user actually use their money? Do they have to pay to catch a taxi to get their cash? Have they got a digital means? In China, it's one thing that they've managed to roll out online solutions and apps, but most central banks haven't played that direct consumer-facing role, and I can't imagine would want to get into customer service, which is what it boils down to. So the financial inclusion problem for me is the same, whether it's a card, whether it's a mobile phone, whether it's CBDC, no matter what the underlying money is, that last mile problem is the same problem. So I'm not sure that it helps for financial inclusion. I think there are a couple of other places where it's really interesting. The one is cross-border payments. So if you can make that cheaper and faster, then perhaps there is a case there. But at the same time, that's happening anyway within the SWIFT environment, where the majority of their payments are as good as near real time. And then the other very strongly, and I think what really drove a lot of the experimentation, is the sovereign issue. So can a private entity who is extremely powerful on a global level impact your money supply, your sovereignty of how you choose to manage your currency, all of those issues? And I think that's the reason that many central banks have been spurred into doing this piece of work. I think that's a tougher one when you a kind of mid-tier to small country, because the power of those entities is, I'm not sure that you can protect your sovereign currency against that by competing with it. I think it's only regulation that's really going to protect you there. So I think to some extent the business case is still open for debate. I've certainly seen US economists suggesting that CBDC would be a very strong means of driving down the cost of payments and the impact on the GDP. But their cost of payments and GDP impact is much higher than in this country. So I've heard it described as the nuclear option to force the costs in the system down. I think that many jurisdictions have dealt with that differently. I also, at the same time, though, think it's very important that central banks do stay abreast of both the technology, the business models, and the regulatory regime here. So for all that, you could probably hear some skepticism in my asking, so what is the problem we're solving? I think it's critically important that central banks do understand and do experiments. And there are cases where I think it works. I think some of the wholesale delivery versus payment, you could probably reduce from 3 days to real time. That frees up capital. So I think there are very specific use cases, but you need to do it to solve a business problem.
Whether you're a seasoned podcaster or just thinking of starting a podcast, you need to listen to Buzzcast from the folks at Buzzsprout. Here we go! Buzzcast covers everything a podcaster should know, from marketing strategies and how to make money from your podcast to the latest and greatest tech and industry insights to keep you on the cutting edge. Follow Buzzcast by clicking the link in the description or go to buzzcast.buzzsprout.com and keep podcasting.
I've taken on a bit of a journey. We've gone on a bit of a payments journey today. And we're going to kind of end up with my favorite topic, which is cryptocurrencies. I'm not going to ask you what you feel the price of Bitcoin is going to do. I promise I won't do that. But I was having a conversation with someone online on LinkedIn, actually, just the other day. And there was, I won't mention names, there was a retailer that announced that in 1,600 stores in South Africa, you can now pay with Bitcoin. And this was posted. And my question, perhaps this is naive of me, and I'm happy to hold my hands up if someone challenged me, was if you read about what's happening with Bitcoin and you read about what's happening in crypto, they're expecting what they call this bull run to happen to the lead up to halving of Bitcoin in 2024. So me as a consumer, would I really go and spend my Bitcoin on eggs and cheese and bread, where if I wait 6 months, actually I could then go and buy steak and I could buy, I might even be able to buy a car, right? So do you think this is a bit of hype? Do you think there's an actual business case around using Bitcoin as a form of currency now, because it's still so volatile? And that's why I kind of took you down the CBDC route, because obviously that's way more regulated. If we talk about that as a concept, again, not your personal view, but your sort of personal view on this, would you go and buy your groceries using Bitcoin?
So you touch on a very fundamental question. Is Bitcoin money or is it an asset class? So if your first conversation is it an asset class, because then I'm parking my money in there to see it grow and I'm benefiting from the growth of it. And I think there's a very strong argument to describe cryptocurrencies as an asset class. But that doesn't make them ideal for transacting. So replace Bitcoin as an asset class with, I don't know, gold futures. Would you want to go and spend your gold futures at Pick and Pay? Just to pick a name out of a hat. So I'm not sure that cryptocurrencies are ideal payment mechanisms, but we will see how that plays out. So I watch that solution with great interest, and I hope that at some point we will know what the volumes look like and what the demand is in that space. Because in the end, money is what people believe money is.
Yeah, absolutely. From a PASA perspective, when it comes to this form of payments using cryptocurrency, is there an involvement on your side for that as well, or does that sit outside of the core functionality of, or the remit of how PASA is being set up at the moment over the last 25 years?
So until it's a payment, i.e. until it's money, it doesn't fall within our remit at all. So in this country, it's all crypto assets. So it's the equivalent of you switching your car for the magic beans in the children's fairy tale. It's barter. You're switching one asset for another. We don't, under our current regulatory regime, it's not a payment. So it doesn't fall under our remit at all, except at the point at which it becomes rands. And their parties providing solutions like this one might find them falling under something like the third-party payment service provider directive of the Reserve Bank, and therefore are required to register with us So we have visibility of those business models, because the moment it's rands that's owing to somebody else, then it starts falling into the payments regulatory space. And at some point it has to get converted from Bitcoin to rand. It's just a question of where in the value chain does that happen. So,
and that's it more with Treasury as it does sort of with SARB, or is it more of a SARS issue, the revenue authority? It's kind of everyone.
So third-party payments providers, so the RAND piece of it is a Reserve Bank directive. And we register those entities in terms of directive. So that falls squarely into our remit. So the solutions that are on the table would be, at least for the RAND piece of the solution, registered with our organization. The point at which it is a crypto asset is a much broader group of regulators. So that is being dealt with parties from the financial conduct regulator, the Reserve Bank, the financial surveillance guys who deal with cross-border transactions, and then all of the regulation around anti-money laundering, knowing your client. So that's a much bigger remit from a regulatory piece than in fact the payments piece would be.
Super interesting. My very last question, and I'm going to ask you to go and get your crystal ball, your imaginary crystal ball, and look deep into it. And we're talking in a year from now. Let's not try 5 years, because that's just way too long. A year from now, so we're in the 7th of February, 2024, payments ecosystem in South Africa. What do you think is going to shift? Where do you think we're going to be just in 12 months' time?
So I'll tell you what the ideal world looks like, rather than crystal ball. So I'll tell you what my dream looks like, which is it would be fantastic if the PIB is up and standing at that point, and we're starting to license, or the Reserve Bank is starting to license all these payment service providers into the system, and that we're already on that journey of giving broader access directly to payment systems. And then the other one is, I'd love to see what the volumes look like on PaySharp at that stage. And if we can in any way demonstrate that there are a few places where we have genuinely replaced cash and given people alternative payment mechanisms, then I'll be very proud of what we have, as an industry, have done.
That's amazing. We have we have banks there. We have Mpho coming on to the podcast in a couple of weeks' time, literally just after go live of PaySap. So we're super excited about that, and to learn more about sort of the journey and sort of what the initial launch has been like, and what the plans are there. So that's super exciting. But Ghita, thank you very, very much for your time. It's been wonderful talking to you. I've learned a lot. I'm sure our listeners have as well. And the best place to kind of follow you on PASA is LinkedIn, is your website, Twitter. Where's the best place?
Generally LinkedIn. Our website mainly has key documents, so things like our constitution, our annual report. But for ongoing activity, definitely LinkedIn.
Wonderful. Thank you, everyone. That brings us to the end of this episode. Keep tuning in, and we've got another exciting guest next week. So very excited about that. Ghita, thank you again, and have a lovely afternoon.
Thank you.
And that's a wrap for this week's episode of Talking Success. I want to say a big thank you to Ghita for joining us today and sharing her wealth of knowledge and expertise and on all things payments. Her insights were truly valuable, and I certainly appreciate all of the contributions Ghita's made to the show. In a couple of weeks' time, we're going to be joined by none other than Clayton Hayward, who's the CEO of Vikesh. Clayton's going to be joining us to talk about how traditional financial services companies can fast-track their digital transformation journeys from years to literally months. I'm super excited to have Clayton on the show. He's a fantastic character, so be sure to tune in. Just remember, if you're looking to grow your FinTech, or perhaps you're searching for a new role in the industry, please get in touch with us at Talent in the Cloud. You can find us at www.talentinthecloud.io, or connect with us on LinkedIn to learn more about how we can help you and your business succeed. Thanks for tuning in to Talking Success. We'll be back in a couple of weeks' time, so be sure to subscribe and stay tuned. Until next time, keep talking success.